I've got no private information about Habib Bank in the presentation. Everything I've got here about both Habib Bank and about other banks is entirely based on public domain information. As an accountant, you spend your entire professional career worried about people trying to sue you. And so I want to emphasize that I take no legal responsibility for anything I'm going to say now during the presentation or afterwards during the discussion session. What am I going to talk about? I was given some requested coverage by SIFE, and my presentation is entirely responsive to that, but I've just put it together in a slightly different way from the list of questions that I was sent, but I will show you the questions that I was sent. And I'm going to talk about the market, the competitors, and what I see are some advantages that Habib Bank Zurich has got, and also some disadvantages, because life is never simple. The same things that give you advantages are also sometimes the things that may hold you back. And in particular, what can you learn from the competitors who've gone before? And then we'll have our discussion, which, as I said, I will not be recording. This is me. You've had a bit of my bio read out before. The most important thing on this slide, which is new, is the address of my website, mohamedamin.com, where this presentation will go. And already on that website, I haven't actually counted them, but there's probably more than 100 pieces by now, specifically on Islamic finance, as part of 700 pages on things like politics, community relations, how to succeed in life. There's even a page on how to use business cards effectively, which you might be interested in. So I was asked to talk about the Islamic banking landscape in the UK, scan the competitors, think about opportunities and risks, and what have we learned. As you saw from the table of contents, that's essentially what I've tried to do, but just in a slightly different order. So first of all, let's talk about the addressable market. And I think it falls into four sort of segments: domestic retail, inward retail, and domestic corporate and inward corporate. And whenever people talk about the domestic retail market, the first thing they go straight to is the fact that we've got about 3 million Muslims in the UK based on the 2011 census. And I'm sure that the 2021 census, when it takes place, assuming that it has a religion question again, which I think it will find that number has gone up. And while 3 million out of 60 odd million is not an enormous number, it looks like an attractive retail market. I'm not so sure. I don't know what proportion of that 3 million are too young, but Muslims are a very young demographic in the UK. Our median age is much lower than the median age of white British people. And young people are not realistic customers for banking operations. Another big chunk is simply too poor. They don't have enough money. They don't have enough financial needs. Their main financial need is being short of money. And again, on average, British Muslims are noticeably poorer than people who are white British. But it doesn't end there, because that's the financial exclusions. There are also religious exclusions in terms of reducing the available market. The first one, the obvious one, is that lots of British Muslims, and indeed lots of Muslims all around the world, don't have a problem with using conventional finance. They may have aspects of conventional finance that they don't like, payday lenders, for example, loan sharks, but by and large, they're okay with having their current account, their mortgage, their savings account with a conventional bank. Even countries like Bahrain, that have been pushing Islamic finance quite strongly for many decades, a very high proportion of all the banking in Bahrain is still conventional. The only countries where banking is 100% Islamic are those countries where it's 100% Islamic by law, such as Iran or the Sudan. There's another segment of the market that is very easy to miss, and I became very aware of this as a result of an experience I had when I was at the Muslim Council of Britain around about 2008. There is a significant, and I have no idea about the precise numbers for any of this, but it is genuinely quite a significant number of Muslims who don't believe that Islamic banking, as done by real life Islamic banks, is really Islamic. They condemn it, they refuse to take part in it, just as they refuse to take part in conventional banking. Once you've excluded all of these segments I've been talking about, what's left, and I have no idea of the size, is the real addressable retail market in the UK. It's not anywhere like zero, it's a meaningful number, but it's nothing like 3 million. And what do people in the UK retail market ask for in terms of Islamic banking services? The main things are residential mortgages. I became aware of Islamic finance as a subject itself properly for the first time when I was on Hajj in 2002. We booked with Al Hidayah, my wife and I. We didn't book with anybody else. Everybody else on the party that we were part of were complete strangers, but you tend to pair off with people. And I spent most of my 16 days on Hajj with a man who was in his mid-30s. He had a PhD in biochemistry, he worked for a pharmaceuticals company in middle management, and he did not own his own home because he believed that conventional mortgages were religiously prohibited. And I spent 16 days arguing backwards and forwards about what was different about Islamic banking, conventional banking, murabaha, etc. Current accounts everybody wants, they want savings accounts. Things that they typically don't ask for but do need are equity savings products. One of the issues about the population generally is true of the white British population, is true to an even greater extent of, I would say, British Muslim population, is a lack of saving into equity related products. For a variety of reasons, including ignorance, people who want Sharia compliant solutions, and there are some offerings around, but very, very few. More in America than over here. They need pensions because the whole thrust of the marketplace is away from defined benefit pension schemes, and many employers now already offer Sharia compliant pension options to their staff. I know that firms like Ernst & Young, PricewaterhouseCoopers, etc. definitely do. Insurance, takaful. There have been various attempts over the years to launch takaful in the UK, not particularly successfully, and I'm not suggesting that a bank of your size necessarily wants to do that. Clearly I don't think it's feasible, but there is a lot of scope potentially if a product does become available of white labelling. The corporate market, it's basically business loans and property development finance. That's what people ask for. There are needs that exist that are unmet. Unmet both because of not sufficient provision, but also in many cases the corporates don't focus on it enough. With my background in corporate treasury, I'm particularly conscious of foreign exchange risk. And it's amazing how many people will take out borrowings in foreign currency without even thinking about the risks that they're running. And if you can offer Sharia compliant hedging solutions to people who want Sharia compliant finance, I think there's an upside there. In the same way, there are now ways of Sharia compliant interest rate risk hedging. So I'm not going to talk about any more about the sort of corporate market. Let's go on to looking at the experience of competitors. Who are the competitors? In the UK, we have dedicated Islamic banks, both retail and corporate. We have lots of windows of conventional banks from OIC countries. A lot of Middle Eastern banks, all the Middle Eastern banks operating in the UK are basically conventional banks, but a lot of them do actually offer Sharia compliant mortgages if you ask them, etc. And then to some extent windows of UK conventional banks. And by window, if you're not used to the jargon, if you think about walking into a banking hall for banks that still have banking halls, you go to a cashier. Well, that bank may have a conventional cashier, but next to him, in the next window along, there may be somebody who is offering Islamic financial services as the Islamic cashier. And behind the scenes, there is separation of Islamic funds and conventional funds, but it's all part of one overall legal entity. That's what windows means when people are talking about it in Islamic finance. So looking at the retail Islamic banks first, Islamic Bank of Britain was the very first Islamic bank launched in the UK. They were real pioneers. They spent a fortune working with HM Revenue and Customs to get the law changed to make Islamic banking feasible, because there were many aspects of UK tax law that simply would not work for Islamic banking, and so the law was changed, starting for stamp duty purposes even before this in about 2001, and then for corporation tax purposes starting in Finance Act 2005. And that's about the time that I got interested in Islamic finance, because I was asked by a technical publisher to write a commentary for their annual Finance Act handbook on what the new legislation actually meant. So Islamic Bank of Britain was first, purely domestic retail focus. Later on we have ADIB UK, which is the UK subsidiary of Abu Dhabi Islamic Bank. They're not really focused on British Muslims. Their clear goal is to serve high net worth individuals from the Middle East, mostly from Abu Dhabi, for their UK activities. The other Islamic banks in the UK are all corporate focused investment banks. Bank of London and the Middle East, European Islamic Investment Bank, now called Rasmala, and Rasmala's gradually pulled out of pure banking as such into entirely asset management, and they've moved their focus away from the UK as well towards the Middle East. But they're still a UK company, no longer quoted. It's now Rasmala UK Limited. It was Rasmala UK PLC, but we'll look at their financial record of all of these banks in a moment. Gatehouse and QIB UK, subsidiary of Qatar Islamic Bank. So how have they done? I spent a while over the last year writing articles about these individual banks. I've still got to write one about ADIB, but rather than going through each bank year by year, I've just summarised them. So this is from the time that the bank started business until the end of 2018. Their cumulative profit or loss. And as you can see, it's a cumulative loss for every single one of them. They've all lost money for different reasons. And you can see on the second column how much share capital was put into these banks to give you a sense of scale, because clearly losing £21 million is much worse if you only had £86 million put in than if you had £255 million put in. But these are their results, and we can talk later in some of my presentation. I'll be covering why these losses have occurred. If you look at the current situation of Al Rayyan, for example, it's actually not bad. After they were taken over by Qatar International Islamic Bank, Oh, sorry, Massive Al Rayan. Yes, you forget some of these things. They had a lot more capital put in, and as a consequence, they were able to do a lot more business, and they're now making, from memory, about an 8% rate of return on equity, which is, in today's banking market in the UK, is actually not bad. Windows of conventional banks. HSBC had a very strongly branded operation, HSBC Amana, which they still have in some countries overseas, but they closed that operation down in the UK completely. It just wasn't making enough money. Lloyds offer Islamic bank accounts. Last time, a few years ago, I picked up a Lloyds leaflet just out of curiosity, and it was their Islamic sort of current account available. Barclays offer sort of corporate loans for £2 million upwards. There's quite a lot of small-scale activity, but nobody's seriously interested in it. They will do it if people want them to. And the big investment banks like Deutsche Bank, etc., they will all do so-called structuring. They will do one-off specialized transactions for you if you want, just like they'll do anything else. And the foreign conventional banks, particularly aimed at high net worth individuals, they have a presence here, but you can't get any data because, of course, people don't break out their Islamic operations from the rest of what they do. So moving on to how I see the situation from Habib Bank's perspective in terms of advantages and disadvantages. The most important thing is that you will be running a window operation. And the big plus of that is that it minimises the extra costs to you of offering Islamic financial services. And you've got an existing customer base. Some of that customer base, now that you're offering it, may well say, I would rather have the service provided Islamically. The negative is the mirror image of those positives, which is that some people just don't like windows. They worry about what's on the opposite side of the window. Is it really sort of Sharia compliant enough? By and large, if people are given a choice between dealing with a bank that is dedicated 100% Islamic and a conventional bank with an Islamic window, I think most people, if other things are equal in terms of price, customer service, etc., they would prefer the dedicated Islamic bank. But what can we learn from the competitors? First of all, it's very easy for a subscale bank to attract deposits. When you look at the accounts of Islamic Bank of Britain from the time it first started, it very quickly attracted large amounts of deposits, particularly because they had a strategy of having physical branches. At one time, I think they built up to 9 branches in the UK, although then have been cutting it back. But having attracted the deposits, they couldn't do anything with them. If you looked on the asset side of the balance sheet, there was nothing there apart from interbank deposits. And their share capital was so low that their regulator would not allow them to take the risk of getting into the house mortgage market. It was only after they got a massive injection of extra capital that they were able to get into the mortgage market, which they've now got into in a big way. I think from the last balance sheet I looked at, they had about 1.4 billion of domestic mortgages. That's their main business in terms of the asset side now. So these subscale banks, basically, they have operating costs, and those operating costs translate into losses, particularly made worse by the fact we're in such a low interest rate environment. The other issue, which you see particularly from the 4 corporate banks, is that you have capital. Again, you've got infrastructure, you've got expensive people, you've got deal makers, and they have to go out and chase business. And then, of course, it's easy in a bank to lend money. The hard bit in a bank is getting it back. And if you look at Bank of London and the Middle East, you'll see years when they're making positive small amounts of money, then every so often there's a really bad year where all the bad loans come home to roost and you've got a thumping great loss, which is why they've got 21 million of cumulative losses, although they're now going through a phase where they are sort of making money again. And I think there is real opportunity, and we're seeing it from some of them, like Bank of London and the Middle East again, are providing asset management services, because the great advantage of those is that you haven't got the same balance sheet risk and advisory services. You just got people risk in terms of costs. So compared with the subscale banks, you don't have to. I reckon that if you create a new bank in the UK from scratch, you have to have some running costs of 2, 3, 4, 5 million pounds a year. You just can't run without those kind of costs. And unless you can get more than that of revenue, you're simply going to lose money every year. Well, you are already here, you've got your infrastructure, you need negligible additional infrastructure to operate Islamic financial services, so you haven't got the problem of these subscale retail banks. Similarly, you should have less pressure on you to chase new Islamic business, and therefore hopefully avoid some of the problems that we've seen with the other corporate banks, basically taking on large amounts of sort of shaky business just because otherwise what do? Asset management, I just don't know what your sort of capabilities are, whether you want to build up those capabilities, whether you're interested in that market or not.